So the top of the news, believe it or not, might be that used car prices are going up. We'll talk about that and so much more on the Monday morning edition of my channel. For those of you who are new to the channel, on Sunday night, I put out a Monday morning version that talks about what's going to happen during the week with Tesla and with the markets in general. And then on Wednesday, I do a midweek. And then on Friday, I do an analysis of what happened during the week. And then all during the week, there's all these other shows. We'll talk about a couple of them at the end of this show that you do not want to miss if you've missed them so far. So let's get into the meat. But one last thing, if sometime during this show you decide you liked it and it was valuable to you, hit the like button. If you'd like to see more in the future, hit subscribe. If you'd like to be notified, you know what to do. And also, I'd love to have some more Patreon folks sign up. It's only $5 a month, and a lot of this stuff gets put up well ahead of time if you're a Patreon member. Okay, let's get into it. So used car prices are moving back up after being sky high during the pandemic. They came down last year rather abruptly and created a massive scare that the world was going to see another credit failure because people would just turn in their cars because they weren't worth as much as when they purchased them. I mean, they weren't worth enough to pay off the debt, rather. Kind of like the 2008 recession problem. I said months ago, I said that this could not be at that level. It would not be something that would be at the level of the crisis in 2008. It could hurt markets, it could hurt banks, it could hurt other institutions. However, what's happened is that that's turned around. We're seeing another one of these boom bust situations where things are out of whack and it's going to take time for them to straighten out. Some pundits have suggested, and I think I might agree with this, that some of the car manufacturers might actually be reducing their potential production capabilities right now in order to keep their prices high. This is lowering the overall total availability of automobiles, and that therefore makes used cars seem cheap again, or seem at least available. So that might be part of what's going on, but the uptick so far year to date of 8% is not insignificant. So here's a couple of things. That means that I think the crisis is over with regard to repossessions and what that might have done to the banking industry. Number two, that also means it's more likely that new car sales and prices will be solid. So the idea that prices are going to keep falling, I'm going to talk about that more in a minute, but I think that that's not going to be true. So I think that we're likely to see more price increases rather than price decreases for both Tesla and the rest of the industry. Tesla is building cars at full tilt. We'll talk about that more later. And then some say that ICE manufacturers, I said that already, that some of the ICE manufacturers are holding back, but Tesla isn't. So that's interesting. I would say also keep in mind that car sales in general do better in Q2 than they do in Q1. So keep watching this space to see how this all plays out over the next few months. All right, let's get into kind of the some of the general stuff. Number one, the big issue the last 2 weeks has been the banks and the failure of SVB and other banks around the world. I think we're probably past that. So the governments have stepped in, appropriately or not, they've stepped in order to solve this issue. If you looked at I think it was my Friday night version, I was talking about the fact that when you've got this whipsaw that was caused by COVID and it's rippling throughout the economy, the government stepping in is commonly probably not going to be the right thing to do. It just creates more energy in the same direction, or it oversteps and pushes things down. Anyway, we've seen it over and over again, too much money flooding in, then the Fed coming in and raising rates too fast, and a dozen other little smaller efforts that have been done, I think, that have just exacerbated this massive back and forth swing. Make those decisions slower over longer periods of time if you're going to do it at all, government, because this is not helping. Okay, so I think the banking thing is over. That's my main thing. I don't think you'll continue to see more questions or big market moves next week due to any kind of banking problems. Here's another one that's going to be a little shocking, like the car thing. Housing, it's not shocking me. If you listen to me all the time, you know, this is not a shock to me. There's no inventory available of housing, okay? There's some inventory available in some cities for rentals, but there's no inventory available for new housing or used housing for folks to move into an existing home. This inventory problem is not going away. It has not gone away. It's not going to get better. Grandma and grandpa, me, I'm not selling my house. I have a 2% mortgage. Why am I going to sell the house? In California, I'm sitting under the old Prop 13, which means that my property taxes are super low. Why am I going to sell my house? People across the country are not selling their homes because they'd rather rent them out or just let them sit empty than to eliminate those phenomenal mortgages. And there's no way, unlike in previous generations, our mortgages don't have an opportunity to transfer that mortgage interest rate onto the next person. So why is anybody going to move? Why is anybody going to sell? Well, that means that there's no inventory. Well, how's that affecting anything? Well, prices have come down on homes as interest rates have gone up. That almost has to happen. Same person can't afford the same house if the mortgage interest rates are going up. But now mortgage interest rates are not going up, they're flat or down. And we're coming into season and there just isn't enough housing for those folks that are going to want to buy a house. Interest rates right now are not horrible on a historic basis. So I think that there's going to be a market. We only have 3.6% unemployment, which means everybody's working, which means there's going to be people that are at the point in their life when they're going to want to buy a house and there's not going to be any houses for them to buy. Spring is the market. That's when the market happens, spring and summer. So it'll be interesting to see just exactly what happens to housing prices, whether they return back to where they were, whether they go half like the cars have. Pricing overall in housing might be down around 15%. Will it return back up 8% during the spring market? That will be interesting to watch, just like the cars, as evidence of where the economy is really going to go. Okay, what's happening this week? So first of all, on Tuesday, you've got consumer confidence. The street is expecting this number to stay above 100, if just barely. I certainly think people have jobs. We just said people have jobs. They're getting their hours. They're not seeing a high likelihood of losing their jobs. And there are some increases in salaries that are taking place that are not as good as inflation, but at least people, I think, are kind of over it with regard to the inflation thing. They're starting to see, okay, maybe inflation is going to simmer down now, and maybe we'll be able to start thinking about how we can spend our money on the normal things we do in spring. We'll talk about that in a minute. So I think they're right. I think consumer confidence will stay good. Always take into consideration when we're looking at a potential recession that a huge percentage of the population are on Social Security, another huge percent work for the government, another huge percent work in industries that are recession-proof, like grocery stores and things of this nature. So it's only a small percentage. Well, it's a good percentage, maybe 25% of the total population that is not immune to recessionary pressures. So that also is something that you should be thinking about. And keep in mind, this hasn't changed. I've had a lot of clapback in some of the comments over the last couple of weeks. There's still 1.7. The numbers come down from 2.22. There was 2 people chasing every 1 job. I'm sorry, reverse that. That's normal. Why would I say it that way? Because that's how it's always been. No, there are 1 person chasing every 2 jobs available. There's 2 jobs available for every 1 person that is seeking a job. Now, sure, there's mismatches, and that's part of the problem, but it still doesn't change anything. If everything was perfectly matched, we would still have, if we got down to 0% unemployment, we'd have something like 1 million jobs out there that would not be filled. So it's a huge problem for the economy, but it's also something that says to me, how do you have a recession when you've got that situation? All right, next, inventory numbers. Back to housing numbers. We do have some housing numbers that are coming out on Tuesday. We'll also have the price indexes with regard to housing come out on Tuesday. That's why I wanted to bring that up earlier. I'm sorry, I forgot about that. Okay, now we go into inventory numbers. All right. If it's going to be a recession, you expect inventory numbers to start increasing, inventory percentages, the total amount of inventories on this index to be increasing. Well, they haven't been. They've been staying steady. They've been going down. There's just no evidence that inventories are increasing, but we'll find out again on Tuesday. Retail inventories were up 2% last month, and wholesale was down 4%. So that's pretty flat. If you start to see them going up radically, then that would be a recessionary indicator. It would also indicate that probably the prices are going to start coming down because nobody's going to want to sit on inventories. But that just doesn't seem to be the case. If you see inventories going down a lot, that would probably be evidence that the economy is doing really well, because when inventories go down, manufacturers have to make stuff to replace those inventories. And so then they need people, and they need, they're generating income. So anyway, that's another report that you want to look for this week. Initial jobless claims come out on Thursday. I doubt if anything's going to move the market very much, because they were really lower than expected last time. And I don't think they'll go lower. If they go up a bit, I don't think that's going to move the market. If they went up a lot, I still don't think that's going to move the market. So I think because last time they were so low, the expectations are not going to be such that it'll move the market no matter almost what happens with these jobless numbers this week. On Friday, this is the big one. So you got to wait all week to get the big number. But the big number that comes out on Friday is the PCI. And that one talks about what people, the actual consumption, the price consumption index. It tells you what's happening with regard to how people are consuming, rather than looking at the cost of a basket. So that indicator has been around 4.7. Now the core has been around 4.7 for the last 3 months. If it stays around the same, or goes up a point or two, goes up to 4.8, 4.9, goes down to 4.5, 4.3, 4.4, I don't think it moves the market at all. That'll be kind of what the market's expecting. But if it dropped a lot, let's say to 4.1, or if it went to 5 or higher, either one of those could potentially have a big impact. We're talking like a 500-point move in either direction. So obviously we're looking for it to go to 4% or lower. If it goes to 5% or higher, that would be very, very bad news. All right, keep your eye on bonds this week, because the bonds will be trying to predict what happens to that index on Friday, and they'll be looking at other things too. But if you listen to this channel, you know I pay a lot of attention to bonds, pay a lot of attention to oil. Oil prices are still down and staying low. The bond prices are down and going lower. So what happened last week was pretty interesting. The 2-year finally started to invert less. It had been as high as a full 100 basis points. Last week, it dropped to something on the order of 40 basis points. If that continues to shrink, or goes to even, or uninverts, I think the market would like that a ton. That would be a great reversal, would indicate no recession, or be an indicator. Now you want to see that happen over several days or weeks, but that's a big one to watch. Does that continue to collapse or not? The 2-month is also didn't collapse nearly as much. The percentage didn't collapse as much. The Fed and others pay more attention to this 2-month one, comparing it to the 10-year. It's staying shockingly high, but again, I'd watch that. It could start to come down. All right. So let's go to Tesla then. Tesla's pricing decision seems to have been a real winner. It seems to have been a huge success. In fact, it's almost all people in the automotive world are talking about, whether it's in China, in Europe, or the United States. Tesla's pricing decision worked. And the result of their pricing decision is that they are making jillions of cars, probably way more than anybody was expecting. I'm going to do a video on that either Monday or Tuesday. I'm going to review my analysis. And I can tell you right now, I'm back over 2 million for this year. And but I'll spell it out in detail in that video that I'm going to do later this week. Subscribe, notify, so that you can be notified when that video comes out. So this is going to be an interesting situation, because, as I mentioned before, people think that now that Tesla has lower their price. They're just going to keep lowering their price. I can't tell you how many articles I've read, videos I've watched this last week. Oh yeah, this is just the beginning. They'll just keep lowering their price. Well, I just don't think that's going to happen. I think that if Tesla is selling everything they can make, and they're making as much as they can, which is what it appears to be right now, that if they start to see any kind of move out, a significant move out in the waiting times for the cars, they're going to pop up the prices. Might be 500 here, 1,000 there on various models and various locations, based on what it is that's being, what people want. But I think you'll start to see prices on Tesla vehicles start to move up slightly. I don't think that they're at all interested in the China Automobile Association, or can't remember the actual name of this group that came out last week and was all complaining about Tesla messing up the market in China. I don't think Tesla is terribly concerned about that, but I do think they want to maximize their profit on every car sold. And if they think they can raise prices back up, I think they will. On the other side of the coin, which some people are talking about, only a few, lithium prices have collapsed, and CATL is saying that they're in renegotiations with every car company that they deal with, dropping the prices of their batteries. So that renegotiation obviously started with Tesla, their by far largest customer. And so you can assume that Tesla's margins are going to be doing much, much better with the price of the most expensive component of the car coming down probably dramatically. So how is that going to affect decisions that are made out there? It could affect decisions to drop pricing. I don't think so. I think it's going to affect decisions to increase margins as long as every car they make is being sold. And that's what has happened as a result of their price cut. By the way, take into consideration, do you think that Tesla knew that lithium prices were going to be dropping and that CATL was going to get into renegotiations with them on battery prices before they made this decision to drop prices in January? You think? Okay. So like I said, I'll be doing a deep dive on that later. So Tesla looks really, really strong right now. They're in a position of pricing power. Their factories are maxed out. I think we're going to see a beat this week, next Sunday. I think you're going to see a beat on production numbers. I'll talk about that in this other video later this week, either Monday or Tuesday. I'll talk about what I think the numbers are going to be. Most people now that are following Tesla carefully are thinking that we're looking at more like 435, 440 sold, and maybe 450, 460 made. That would be a very big difference than what expectations have been, and would potentially mean that there's going to be a huge beat on profits come either the 19th or the 26th when we have the earnings report. Now, in addition to that beat, there's going to be the IRA money, and there's going to be $1 billion in profits from energy storage, which the street isn't expecting. I've been talking about this for months and months. It's still not priced in. It's not priced in. So something else to watch for. Okay. Now, in order to understand some of these undercurrents, you probably want to go back and look at some stuff. Okay. There are two categories of Tesla business, which the street doesn't get at all. Now, they're not giving any benefit at all. They're not giving any valuation to the robotaxi business. They're not giving any valuation to the charging stations. We've talked about this so many times. There's all these divisions, and they get no love. The street's giving them no value. And quite frankly, they're not going to give them any value until it's 10 to 20% of the overall sales or overall profits of the company. That's what it's going to take before the street pays any attention to the various divisions. The two exceptions to that are the robot, Optimus, and energy storage. So energy storage is not going to reach 10 to 20% by the first quarter or the second quarter, but it's going to be significant enough that I think we're going to start to see the market have to take it into consideration. And it's going to be at such high margins that they're going to have to take it into consideration. Plus, it's so easy to grow it. So one of the things I suggest you do is go back and look at a video that I did with Bradford Ferguson. That was a couple of days ago. Actually, Saturday. It was out on Saturday. You want to look at that video. It talks about the biggest secret that Tesla is keeping, which is the massive number of buildings that they have purchased or that they're leasing in Lathrop, California. It's not just one building. When Bradford was on my show, he pointed out 5 or 6, and then he did a tweet today, says, oh, by the way, I found out there's 5 more. So there's a huge campus in Lathrop, completely unknown, completely secret. How do you keep that secret? Thank you, Bradford, for for going and spending a week there and figuring out what's going on there. Of course, we broke this news with the Elon Musk mission back in October about Lathrop. So we started the ball rolling. Other people have picked up the ball and done amazing reporting. I thank all of them for the great on-the-ground reporting that's been done. Now, the other thing you want to go look at is the Optimus. If you are an investor who likes growth and or you like a little speculation, or you like to take at least a small position on something that could just be one of the most massive things that's ever happened, well, the most massive thing that's ever happened in history, then you would think that these investors who already have a solid winner in Tesla would say, you know what, I need to be a little stronger in there because I want to be around for when Optimus, the robot, actually starts going into production. Because when that happens, who knows what's going to happen to the stock. When that thing goes into production, I mean, when I talk about production, I'm talking about literally for sale, production for sale. Like when Cybertruck comes out this summer, that'll probably have a pretty good effect on the market. When they start making semi-trucks in numbers, that'll probably have a small effect on the market, even though it should have a huge effect on the market. But when the robot starts happening, this is, according to Elon Musk, an unlimited TAM, the largest business he's ever started, the largest business has ever been started by a human being, and the potential for it is in the trillions and trillions of dollars of sales and profits. Everybody that is an investor should want to have a piece of that. I mean, if you want to roll the dice, why wouldn't you want to roll the dice on the biggest thing that's ever happened in history? So this is why over the last 25 days, there's been dozens and dozens and dozens of YouTube videos done on Optimus, but mine are the best. I started out with one with Scott Walter and John Gibbs earlier this month. That one went crazy, and then John and Scott did a few of their own. Then I had Joe, I'm always blowing Munaretto. I had Joe Munaretto on his, was an amazing video. That went crazy. Then I got Joe Justice on. We did 3 videos. Everybody loved those. Then I did another one with Scott yesterday. You should be watching all of these videos. If you aren't fully invested in Tesla already, if you've got some more money on the sideline you want to throw in sometime in the next 18 months, probably sooner rather than later, Tesla is going to start selling Optimus robots to manufacturers probably in the beginning, or manufacturers and other business types. Maybe there'll be some consumer opportunities, but I think for the first year or two, it'll probably only be to businesses so they can really be in touch with the application and with watching what the robots are doing and helping them to iterate to become better and better and better. But it's going to happen way sooner than anybody thinks. Watch the videos and see if you don't agree by the time that you're done watching those videos. They're all up and they're amazing videos. All right. So those are 2 reasons. Again, it's almost the same thing on energy. If energy is already up and running, it's already selling at the rate of $22 million a day minimum. $22 million a day minimum. That's Bradford Ferguson. When he went up there and counted, he wouldn't tell us how many, but he intimated to me that the 10 number would be a fine number that you could be conservatively okay with. He intimated that. Okay. So I'm guessing it's way more than 10. And he's not going to tell us for 2 weeks. He just said on Twitter today, 2 weeks, he's going to give us the number. All right. So, but if you were an investor and you already know that there's $22 million a day going out the door in Lathrop, and again, Elon Musk has said and can prove that the TAM on this is almost unlimited. The total addressable market is almost unlimited. Why wouldn't you want to have a piece of that? Why wouldn't you want to roll the dice, even if you don't think it's going to be as big as Elon says? Why wouldn't you want to be part of what might be another $500 billion business? there are not many $500 billion businesses out there. Okay, you can name them on your on 3 fingers. You can name the 3. Aramco, Apple, and Amazon, not Amazon, Walmart. Those are the 3 that are doing that kind of revenue. And the profit margins on this will be huge. So those are 3. The last is, you've heard me talking about this if you watch my show. So gosh, if you've already heard me say this 15 times, you can leave now. Okay, finally is what I call the blue chip concept. We need a new story. I did a video about this the other day. Tesla has been seen as a go-go stock, as a story stock, as a, oh my gosh, if that could possibly happen, great, but I don't believe it, as something you did roll the dice on, as something that has made a lot of Teslaonaires and a lot of companies, a lot of people that were already millionaires have become billionaires because of Tesla. But that's just not the story anymore. That story is behind us. Tesla has $20 billion in the bank, net, $22 billion in cash, about $1.5 billion in long-term loans or bonds or something other than cash or cash equivalents. They are $20 billion to the good. I have not been able to get the number. I'm still working on this number. If you know this number, could you send it to me? If you can find the number, if you can find some place on the internet where I can get the number, who are the companies that have more than $20 billion in net cash on their books? I would love to have that number. I'm saying it's no more than 50 companies in the world. Probably less than that. It's probably 25. But I would love to have that number. I've tried Bard. I've tried ChatGPT. I've tried the regular internet. I've tried everything. I can't get that number. I can find 3 or 4, but I can't find out how many is there 50 that have, above 10 billion. I don't care. I want to see how many, and I want to see how much they are in net cash right now on their books. So anyway, what does that mean? That means that Tesla right now, if the street got that, if the street said, oh my gosh, this is a blue chip, and it's doing this much volume now, and it looks like it's going to grow at 50% per year in the future, and the earnings are going to grow faster than that, and that maybe something could explode it. Something, the robots could explode it, whether that's the robot car or the robot humanoid. Either one of those could explode it. If you know that, then I say Tesla should already be at 400. Quite frankly, I don't expect that to happen based on a change in the story, but it's possible. I don't expect it, but it is possible. I do expect Tesla to go to 400 this year, but that's going to be based on a new bull market. I believe it'll go to 700 next year. That will be based on not only a bull market and not only Tesla performing, but one of these things beginning to become obvious, like probably energy storage and then the robot. So that's my theory. I'm sticking with it. I hope you liked it. If you did like all that jazz, but mostly I'm looking for Patreon members. So please join Patreon. It's only $5 a month. It helps me to produce these. I do have expenses involved in producing these. So I'd really love it if you would join Patreon. So with all that said, it's been great talking to you.